Hey everyone, checking in on the markets. We're going to look at the commodities in a different video here over the weekend. So we have a complete shift in momentum with the bulls being in complete control on Thursday, one of the strongest bull days we've seen recently. And then it's matched with the strongest bear day we've seen in a while and a close at the low of the day. So the narrative that was being, spun on Friday and that we're going to continue seeing for the next few months probably is the inverted yield curve. So that's when the government debt for the 10-year is lower than it is on the 3-year. And that's generally a precursor to recessions. It doesn't mean every time it happens there's a recession, but it has happened before the last 4 recessions. That being said, a lot of analysts who use this as an indicator need to see it stay inverted for multiple months. And another factor is that when it does precede a recession, the recession usually starts a year to 2 out. So it's not a right now indicator, but the market certainly acted right now to it on Friday with that sell-off. So it's a very interesting standpoint because absolutely the bears have full momentum, and we're going to be watching, do we gap down on Monday because we ended the day with the bear flag confirming on the hourly time frame, but we have to keep longer term perspective. So for me, if we took out Thursday's action and we gave us this close here just the next day, it would be no big deal. I mean, we just saw this huge bull move of about 5% on SPX, the S&P 500 here, in the last couple of weeks. And if we're just looking at that on a points basis, it's 27.22 to 28.52, about 130 to the upside. The amount of pullback we've seen at this point, we're looking at a $60 pullback. So 130 up and 60 down. Obviously, the 60 down has happened a lot faster. But the bottom line is, if you take out the severity of the complete turnaround, I'd be saying no big deal right now. We're consolidating and looking for the daily higher low to form. That being said, absolutely not going to disregard the severity of this pullback, but it's not enough for me to say, all right, the bears are now in control. We're in a bear market. So keeping in mind, the narrative that I'm looking at is absolutely the possibility of a monthly lower high forming. This is an indecision candlestick as we approach the end of the month. If we lose the weekly uptrend, our monthly lower high will be set comparative to the all-time high, and we're going to look for a monthly equilibrium to form if that's the scenario. We would look for a higher low compared to the December dump low and a tightening monthly range into the middle of the year if we lose the daily and weekly uptrend. At this point, we're still going to be looking for the S&P 500 to set a higher low compared to 27.22. So the scenario where I will be looking bearish on the short-term to mid-term would be if we were to see a pullback. Obviously, a pullback straight down and breaking that level would show a ton of short-term weakness. But if we come down, we set the higher low, we set a lower high, unable to break 28.60, and then we lose the uptrend. That's a head and shoulders pattern essentially playing out is one scenario where the bears would take over in the short term, and that would have us looking for the monthly equilibrium to play out if we see that bearish reversal head and shoulders on the daily. If not, if we form the higher low, the other possibility is we form the higher low and then see continuation back up towards the all-time high. So those are the 3 scenarios. Straight dump to lower lows, higher low, lower high, lower low, the head and shoulders, or a higher low and then continuation. The most likely scenario is going to be dictated on Monday, in my opinion. If the bulls show up Monday and buy the dip, then the odds of continuation will still be there. If we do not see that and we see another pretty solid red day into the 2770s, then we'll be looking at a equilibrium as the more likely range. And if it's another red Marubozu candlestick on high bear volume and we close down at 2760, then the odds of a straight bear drop will be higher. So we have a ton of weakness in the short term, but looking at the RSI levels, the S&P 500 cooled off RSI on a bear flag. This was a very clear bear flag all afternoon that we were watching, and the 5-minute time frame made it clear to us. And it's just this channel looking at clear resistances, rejecting the price. There's our resistance line, and this is again the 5-minute time frame. Here was our support uptrend, and this is what I was watching all afternoon on Friday, saying, all right, the bulls are not breaking this resistance level. It certainly looks like a bear flag. I was watching the 4 and 8 period exponential moving average on the hourly, which were rejecting the price. So the end of the day, drop to a new low was not surprising. But where we stand now, we have extremely oversold conditions on the financial sector. And the question is, when does the oversold bounce start in that sector? Because that's going to slow the pullback on the S&P 500. So yes, absolutely, bears in full control. We have an hourly lower high to be watching. We'll be watching this hourly downtrend. Anything under 28.23 keeps the lower highs intact. But as far as the daily and the weekly chart go, it's not time to sound the alarm, in my opinion, at this point. IWM is much weaker. We dropped to a lower high and lower low already. IWM has done a pretty good job of giving us some early signals on the way up from the December dump, that bounce. And now on this pullback, it's been the weakest. So we have to definitely look at IWM as a potential early indication. And the fact that we did drop down to a lower low on very high bear volume, we're now looking and saying, all right, it is a possibility for the S&P 500, but the difference is S&P saw higher highs where IWM did not. So the weekly is still pulling back on IWM, still looking for that higher low to form. And if we look at the monthly time frame for IWM here, it's much more likely that we're going to have that tightening monthly pattern at this point. RSI levels, we're oversold on the hourly. The 4-hour RSI is right above oversold conditions. The next support level we're looking down at is 148.39, which is going to be in play potentially this coming week. QQQ, bulls are just fine. Big sell-off day, no doubt, on Friday. Netflix down 4%, Amazon down 3%, but we were so extended. I mean, with the amount of bull move that we've seen on QQQ, if the bulls were to show up on Monday, which again, the close at the low of the day favors the bears for momentum to start the week, but it is a potential bull flag on this daily chart. Not saying it's likely until we see the bulls start to bounce, but this is still, I mean, just to point out how little of a pullback this is compared to the size of the bounce we've seen over the past 2 weeks. Again, if we're just looking at the move, it's 169.34. We're looking at a $14 move, and the amount of pullback that we've seen is $4. So we've pulled back about 40% of, or less than that, but not a significant pullback at this point. And we're watching oversold conditions on QQQ. Hourly RSI is oversold almost, and 4-hour is not almost oversold. So a pretty big difference, not nearly as beat up as the financial sector. So the financial sector also dropped straight to a lower low, just like IWM. And if you remember, a week plus ago, we were pointing out how XLF and IWM were the weakest comparative to the QQQ and S&P 500 setup, and the bearish reaction to the lack of rate hikes by the Fed, and now this yield curve narrative. So on the weekly chart for XLF, pulling back, losing a couple support levels, and again, the monthly tightening range is more clear, and it's looking like we're going to have to pull back and attempt a higher low compared to 22.05 for the financial sector. So the daily RSI getting close to oversold. The 4-hour RSI is oversold. The hourly RSI cooled off a bit with the bounce at the end of the day. It was a bear flag setup as well, but we didn't drop to lower lows and confirm it like we did see on the S&P 500. So the question is, when are we going to see a financial sector bounce? How significant is it going to be? If it's just going to be a bear flag cooling off RSI levels and allowing for continuation to the downside, then we can see the S&P 500 get really ugly. In my opinion, to break this support level of 27.22 on this pullback, we're going to have to see the financial sector give us a bear flag of a weak bounce attempt and then a continued sell-off into oversold daily conditions. So knowing how beat up the financial sector is, I personally am looking for the higher low compared to 27.22 and for a tightening daily range to form into the first week of April. So looking for a support level to be established in the first half of this coming week. And again, we'll take it one day at a time and watch the clues and the volume and all that. Biotech sector pulling back more significantly from its double top. So the double top at the high, we found a support level, tried to see continuation on the Thursday strength, and we're back down. So we're still looking for a higher low compared to 85.05. If we break 85.05, the weekly consolidation will be much more significant, and the monthly equilibrium will be most likely if that support level is lost, and we would look for that higher low to form. So XBI, 85.05 key support. XLF has lost its key support. QQQ still has its key support and plenty of space to go to hold it. IWM has lost key support, so we have a bit of a mixed bag, and it is still the tech sector that's going to have to hold strong to keep the S&P 500 strong. And last, we'll wrap it up with VIX. So 1830 was resistant, and there's a little bit of a clue in VIX in the candlestick on Thursday. So, SPY having a huge bull day and not even closing at the low of the day on VIX, and now seeing this kind of big follow through. So a little bit of anticipation of this weakness, and now we're looking at 1830 to try and break the lower highs. Still need to confirm the trend change, and we'll look to see if we can form a higher low and a higher high to confirm a daily trend change in the volatility index. And otherwise, 1830 is the level to be watching over the next few days. So one day at a time, watching for that bounce, looking for the higher low to form compared to 2722, and we'll see if we get that as we head into Monday this coming week. So this is definitely a reminder for me on why I'm a day trader, to see that kind of complete turnaround. And you could draw, a megaphone pattern. Some call it a megaphone, some call it a broadening wedge. But just looking at the reaction since the FOMC, I'm looking at the support level established and the resistance levels established. And you can see we hit the FOMC top, we hit the low of consolidation. There's our rejection from the trend line again, held support, and we're right at it again to end the day. So I generally don't look at the broadening trend lines a lot, but this one stood out to me in terms of just a higher high and a lower low with this whipsaw action. So I will be looking to be a buyer from oversold conditions, just as a day trader, looking for short-term flips, not holding overnight. And we'll check back in on Monday and see if the bulls are able to put a stop to this momentum. Hope you have a good weekend. Do good things. We'll see you soon. So, Adventure Time, Chapter 14 or something. We are now crossing the Colorado border into Utah. This is a picture of some fire ants accepting my peanut bribe. I've been feeding bugs my whole life. I used to feed spiders in my windowsill cold cut turkey or ham, and they would eat it. And I've been feeding ants. We feed them sugar. Fun to just watch. I just watch bugs. Anyways, these are bones from dinosaurs just along hiking trails. So this is a spine. This is Dinosaur National Monument in Utah, and they have street names like Brontosaurus Way. There's a big femur or something like that sticking out of a rock. Pretty crazy that you can just see these dinosaur bones. There's my first selfie of the trip with my new friend. That's some more petroglyphs just on rock on the side of the road. And pretty cool to, try and interpret what they were suggesting. Who knows? But common themes of spirals and coming off of arms. Not sure. Anyways, it's just one of these spots that's on BLM public land where there's your dirt road, there's your scenery, and there's a whole rock wall, and that's just an art studio for ancient man thousands of years ago. You can see the little drawings right there on the left, some of them. And then there's just a spot you could just camp by a lake right over there. So a nice little adventure. There is nothing developed aside from a parking spot near the lake. There's no signs. There's no people. And it's great. So I was just walking around looking at all the different art. That's where I set up my tent. And I got woken up by a moose the next morning walking through this river here. And the moose ended up just sitting on the side of the river for a good part of the day. And I spent my afternoon on this piece of land there. It's mushy sand. And I would just run as fast as I could from one side and then just slide on my bare feet and go 12 feet. It was just like a mud pit. I had a lot of fun. And there was a rafting crew that floated by while I was acting a fool. And a storm came out of absolutely nowhere, just right over the hill, and these big bursts of wind. And this tent ended up in that water. So I was not prepared in terms of I had not staked it down yet. And again, there was no wind on the day. And it was just like all of a sudden, really dark clouds, winds going nuts. And I jumped in my car to, avoid the rain and had forgotten to stake that bad boy down. So didn't get soaked, didn't sink, but definitely made its way to the water. More shots of the river from the other side. And that is Utah. So didn't expect to see a moose in Utah, but did. So we're going to go over to Canyonlands Arches National Park and getting towards the second half, towards the end of the journey at this point. So I appreciate you watching. Have a great weekend. Check out the USMJ video. Check out the SPY market video. Do some good things. Have a party. Make a friend. Pet a dog.